Hey, how's it going? We just got the closing bell for what is today's Wednesday? Tuesday, November 19th. It was a kind of exciting day. We gapped down on some interesting news that there may be some escalation happening in Ukraine and Russia, but that got shaken off fairly early in the morning. Within an hour of the market open, it just went on a tear upwards. Now, if you were in the Telegram channel, I pointed out that there was a very large gamma concentration at 588 in that we were likely going to get to that point if we decided to move upwards after the open. And then we have a lot of gamma positioning at higher strikes. So if we look over here, that during the day, that 588 gamma concentration moved over to 590. That tells me this 588, that 590 is really all 0 DTE. And then if we got rid of this giant spike, then we see that we do still have a lot of concentration at 600. And beyond that, we have everything in between 600 and 615 is fairly significant. Even 595 is fairly significant. So market participants are positioned for a run higher into the end of the year. So where did we end up? Let's see how close to 590. So in the morning, 0 DT, I also said early indications were 582 and 590 for exposure levels, gamma exposure levels. And it looks like we just went straight to 588 and then kept on going to 591. And where did we close? We closed at 590.32. And after hours, we're at 590.57. So continuing to show that bullish bias a little bit. On a daily basis, we can see that we closed below, or we opened below the EMA 20, but not terribly far. So didn't like the market was panicking. And then we traded right up to the EMA 8. And the EMA 8's at 590.30. We closed at 590.32. So we closed barely above the EMA 8. And of course, after hours, we were a little bit above it. That's really good news. That's really good news. That is a gap up after the elections, a run up, then a pullback to the EMA 20. Then we sat at the EMA 20 for a couple of days, and now we've traded to just a hair above the EMA 8. As long as we can open there or near there and continue to move upwards, then that would be a breakthrough above the EMA 8, and that would be really strong for the S&P 500. Then we'd be looking for 595, just like the gamma exposure levels imply, then 600, which would be very close to all-time highs. What was this high over here? 600.19 or 17. So that was basically all-time highs. And then it looks like, at least from a gamma perspective, we have a pretty clear shot to 615 into the end of the year. Now, from a technical perspective, what happened? We went up, bounced off of the sort of near the EMA, or sorry, the MA90. We could call it the MA9 or 50, but really technically it was the MA90. Then we came through, bounced off the EMA 20, then off the MA 50, and now the EMA 20 again. And this is healthy. This is a nice little pullback. Remember, after the gap up of elections, we were waiting for a pullback or consolidation before the market could run higher. We have now gotten that pullback, that mild pullback into the EMA 20, back into this liquidity pocket over here at 582 to 585. And so far looking very much like we're going to bounce off of it successfully and make our way higher into the end of the year. So that is really good. Now we want to make sure that everything else is supporting that we have the overall larger picture of the markets supporting this idea. So let's go ahead and take a look at our US dollar. US dollar, mild pullback a tiny little bit over the last couple of days, but it looks like it could just keep on moving higher. This was really aggressive. So a little pullback is not not unheard of. So this could just bounce and keep on going higher. So far, that's the more likely scenario, is that we're just going to keep on trending higher. Let's see how that's affecting bonds. Bonds, ever since the rate cut decision, just keeps on moving lower and lower. So no reprieve in terms of bond yields. Those keep on going higher. That's going to affect interest rate sensitive stocks. That's going to start coming in, start putting pressure on consumer discretionary or anything that requires a credit card or a mortgage or some sort of loan in order to finance for most people. Those types of products are going to start coming under pressure. So if I start looking at XLY, we had a pullback. Those are still doing pretty well, actually, still pretty bullish, but I wouldn't be surprised if we started to see a little bit of weakening in XLY and actually XLP. So XLP, because of the tariffs, because of the anticipated tariffs that are coming up, it is going to cause some inflation and going to make goods that are imported, generally a lot of consumer staples and consumer discretionary items are coming in from overseas. They are being manufactured in places like China or Vietnam, so like clothing and toys and things like this. So those will come under pressure. The XLP is not looking great. It's not terrible, but it's not looking great either. And let's take a look at our VIX. Let's see how VIX is doing. VIX, we had that volatility spike when we had this sudden drop off 2 days ago, and then another spike today with that fear in the morning, but has since come down. But you can see that it hit that low over here last week, and we haven't revisited. So even though now the market looks looking like it's bouncing, we still have this elevated VIX level. So we do want to keep our eye on that. Let's take a look at our VVIX and see how that's looking. So VVIX was moving upwards, has since come down and stabilized. So VVIX isn't indicating anything crazy, maybe some sideways chop, so elevated volatility, but not necessarily spiking volatility. And elevated volatility in this case is good. It means that we can move, we can run. Either we move down or we move up, but right now it's looking like we will move higher. Let's take a look at our sectors, and that'll be about it. So let's go to our scan and see how our sectors are doing. Okay, so financials, communications, discretionary. So these have been leading pretty much since the election. So this is on a longer term basis, but we'll look at a 2 week and 1 week basis in a moment. But so far, a little bit of a mixed bag. So these are risk. Okay, but then we have utilities right up here. These are interest rate sensitive utilities and real estate. Those are surprisingly high up here. So we definitely want to see on the shorter time frame where XLU and XLRE land. So let's go ahead and do that. Let's look at a 1 month basis. Discretionary, communications, energies, financials. We still have the same three at the top over here with energies in that mix. Technology next. Okay, so this is starting to look like a pretty good stack here where we've got riskier sectors at the top. Retail, okay, that's great. Then we got some more middle of the road utilities and staples. We would expect that to be lower instead of in the middle. And then we've got basic materials and healthcare at the bottom, but it's looking pretty unfragmented. It's looking pretty good. Let's look at the 2 week basis, financials, discretionary, energy, communications, same culprits. Then we got utilities up here. IKRTP, real estate, a little bit of a jumble down here, but again, not too bad, like better than we've seen it in a very long time. Let's take a look at weekly UE. Let's take a look at utilities. Something has been going on in utilities recently. It looks like it's surprisingly strong. Energies looks like it's doing reasonably well as well. So let's go ahead. Let me take a look at overall our sector view. And then we can look at something more carefully if we need to. Utilities, let's take a look at that one first. Utilities. Okay, interesting. So it did pull back. It is starting to get some strength. We went up and then pulled back and up, broke through that quarter to date VWAP, which is an important level. This is starting to look a little bullish. Utilities are starting to look a little bullish, which means that some of that enthusiasm that after the Trump win is starting to wear off a little bit. Now, if you recall back maybe 1 or 2 months ago when we were talking about elections and how things normally behave, is that we get a lot of enthusiasm afterwards, and then we have a pullback, and then reality starts to set in. So the sectors that were doing well because of one candidate, though they start to slow down a little bit because the reality sets in that the new sitting president isn't going to be able to implement their policies right away. Plus, there may be resistance from Senate and from the House of Representatives, so from Congress. And also that, some things they just may flat out not be, like maybe they didn't realize they can't do it, but they just can't do it because they don't have the support or it's not legal or whatever the reason is. There's some roadblocks. So things will happen slower than people anticipated. And this looks like one of those cases. Utilities were coming down and looks like we're starting to pull back up. And there is a movement of cash from riskier assets back into somewhat safer assets. So what we've seen is XLK has went way up and then came back down. And so that was a huge gap down over here on Friday. And so it looks like XLK hasn't fully recovered yet, but maybe XLU got some of that money. So that's kind of interesting. Let's go over here. XLE has been doing really well. So at first, we got that gap up on the elections and it's continuing to go. So this is uncorrelated to the S&P 500, which is great. But energies are still going strong. We'll see. It did break this level. So we want to see it hit probably 96.5 to 97 and break through that. Then 98 to 98.5 and break through that. And then it looks like at probably all-time highs. And then we'll see energy go. I don't know that, actually, yeah, they could do that as long as the economy is doing well and the manufacturing and industry and are all doing very well. Then we're going to see energy demand. Travel is doing well, like airlines, cruise lines. If those are doing well, then we will see continued demand in energy. And so this could be sustainable, but we want to see it hit and break that 96.5 level first. Silver bouncing and recovering. Real estate looks very much like staples when we saw earlier. It's just kind of chopping sideways now, neither going up nor down. Financials looking very strong. It didn't have that pullback. So where the S&P and all the major indices pulled back on Thursday, Friday, we didn't see that with XLF. So you see, we saw that on SPY, QQQ, that gap down, DIA down, IWM down, but it doesn't look like we saw that in financials. Financials just chopped sideways. So financials very strong relative to the market. So if I was going to go long a sector, so far XLF looks like an excellent candidate. I'm going to write that down myself. And let's take a look at staples. We already said just really chopping sideways. Communications is looking great also. It did see a dip, but not nearly as much as XLK or XLC, and it's already recovering off of it. So XLC is looking pretty good too. Not quite as strong as XLF, but still very, very good. This one's looking pretty good too. Discretionary, again, strong relative to the overall markets, even though everything I was saying at the very beginning of this video, we're talking about how consumer discretionary could start having a hard time. But it looks like that is more concentrated in XLP than it is in XLY. And for now, there's still strength in XLY. So we'd be a little bit more cautious off of XLY versus XLC or XLF, but it's still looking like a very strong candidate. Home builders, not looking super great. XLB basic materials, we'd want to see, is it going to bounce off of that MA200 or not? XLB has been having a hard time, so we'll want to see if it can bounce off of that MA200. And retail, not nearly as good as discretionary. And retail could take a hit based on tariffs as well. So that's definitely one that we want to be more cautious about. Industrials looking not bad, about the same as the market. And small caps doing okay, about the same as the overall market, SPY. Healthcare, terrible, doing terrible. That's the worst one we've seen so far, healthcare. It completely broke through that MA200 and it just very aggressively sold off. This is, healthcare is not doing well, So I'm going to mark that down as a negative sector or a sector to watch for shorts. Same thing with biotech, kind of related, healthcare and biotech. And this one's biotech as well. Okay, so that's all the sectors. So we see that so far, consumer discretionary, shaky legs, home builders, shaky legs, the basic materials, shaky legs, even SMH, the semiconductors, the darling at the beginning of the year, the one that gave us all those huge gains for most of the year, shaky legs. So and then for sure, healthcare and biotech is not doing well at all. But we do still see strength in the S&P 500 and especially in financials, and communications and discretionary are doing pretty well as well. So what that's saying is that for the most part, money is going into riskier assets. Money is in XLC, money is in XLY. Financials, which are going to drive a lot of purchases, their money is going in there. That was kind of a medium high to medium risk sector. So there is money and capital being put to work in these specific sectors. And then the ones that are kind of struggling are staples, home builders, anything that is interest rate sensitive, except for XLU for some reason. Well, we could examine that a little more carefully, but we would want to see this start moving up significantly. Not significantly, let's see, XLU. XLU, it broke over a quarter day VWAP, but we would want to see it get to these highs right here before we got too excited about it. So XLU still has to prove itself a little bit, but it is looking like it is picking up. And then I think that was about it. Those are about for the sectors that were worth mentioning and pointing out. So overall, it does look like as long as the money stays concentrated in the riskier sectors, or it broadens out and it goes into all the sectors and all the sectors are rising, though both of those scenarios are healthy for the market, at least into the end of the year, for it to continue to move up. So all the signs so far are looking like, yeah, we can hit possibly 615 by the end of the year. But the first hurdle is to get above, just to completely clear that EMA 8. Right now, we're sitting right on top of it. If you can completely clear it, then get to that 595, 600 level, then it will be a lot more comfortable that this market can head to 615 into the end of the year.